please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Talked about the equity markets enough. It's not too much happening today, absolutely flat. But there's plenty happening in the commodity space. Crude has fallen after a while. Manisha joins in with a quick roundup of all of that. Hi, Manisha. Good morning.
Morning, and thank you so much for that, Sonia. Well, yes, a third straight day when you have a decline coming in for the crude oil prices. Continues to slide down. Is trading nearly 0.8 of a percentage point down in the global markets. And that's the kind of reaction that you have seen come in for MCX. Yesterday, we were telling you on how it has broken below 4,200. It's now gone down below 4,100 as well. So we are seeing that bit of a profit taking coming in. It has been speculative longs at record high positions. So even a bit of a weak or negative event or news, and you will see most of them actually winding out. So there is an increase in the US rig count, US output, etc. But there's so much else also happening apart from that. The cost of US shale drilling has been increasing. Saudi Arabia is getting into refining now. Markets also are looking at the output from Venezuela and Mexico, which has been declining. So not too many people feel that you are going to look at a crash from here on. This is a correction because the prices had gained 8% excuse me, in a month, and that is what really seems to be working on the prices. Excuse me. The metal space is something that you should keep an eye on. We have seen some profit taking come in for the gold and silver prices. Also, very flat trades happening on your screens there. The US Treasury note at more than 3-year highs is something that's impacting that one sector. In the industrial metal space, while we have started weak on steel and iron ore prices in Shanghai, there is some buying that you have seen on the lower sides come in for nickel, zinc kind of metals. While the China PMI data hasn't been so strong, the feeling is that the China restocking will start after the Lunar New Year holidays, and the seasonal demand will come back as well. So you have seen buying come in on all of those dips in that market. Trading strategies, we have them from KDR Commodities. They have a buy call in case of gold prices. They expect that one commodity to continue to do better in this year and the next as well. They also have a buy coming in for the natural gas prices. Remember, even as the crude oil prices are not doing so well, natural gas seeing some support in the markets today.
Okay, Manisha, thanks a lot for that. Well, let's move on then. Intellect Design is a company that posted a poor set of earnings in Q3 as margins took a hit while revenue growth was flattish. Arun Jain, Chairman and Managing Director of Intellect Design, now joins us. Arun, good morning. So the problem was the margin, 4.6% versus 6.8%. What went wrong?
I think we need to look at the product company very differently than the services company. So I would like to highlight to you that we have grown 25% year on year, crossing 1,000 crore mark. This 4.8 and 6.8 are very, very small, which are running on few deals here and few deals there. Just to give you this indication of some margin, 5 crore we spend extra on sales and marketing. So, but those are transactional items. So to this channel, I would like to see that they see the broader picture of how the product company will pan out from India and how this is a space which needs to be observed that will drive another $50 to $100 billion revenue in next 5 to 10 years, because after IT services space has given $150 billion to the industry, we need to look at it now. The product company is now giving a larger space, and we have a right benchmarking for looking at it, which is coming fundamentally from the critical size of the company, the critical brand of the company, the critical customers what they are acquiring, the critical talent what they have, and critical products what they have, and critical acclaim on those products. So I think those are the metrics which is very different from the metrics what we are seeing in a service sector, and that needs to be really looked at differently over here.
Okay, Mr. Jain, I take your point that, yours is an area, fintech, where perhaps the world is hungry for more and more products. So give us an idea then of growth. We won't look at the margins, right, but if you give us an idea of what is your order book growth, and therefore what is the reasonable visibility in revenues, say, next year?
Yeah, so you look at the last 4 quarters. So this question, Lata, you asked earlier, that we have demonstrated 20% plus growth in last 4 quarters. So, so all the calendar year 17, it is a consistent 20% growth plus which is there, and we have a healthy pipeline. The guidance which we don't give as of now, just to ensure that this is a lumpy business, and that's why the guidance can become slightly lesser. But 4 quarters is a good number for people to look at it. We have a pipeline of 28 deals which is close to 1,000 crore pipeline, out of which license value is close to 550 crore. And few license here and there can give a very substantial upswing and substantial downswing. So that's why we are cautious about giving it, and we give a broad parameter and broad lead indicators. That these are my lead indicators. My pipeline is going, my license pricing is going, my deal, like my Spain customer who is purchasing Indian software for their payment solution. I think that must be something so good in the product, where Spain buyer is buying a Indian payment product for payment modernization.
So Mr.
And
Jain,
when Central Bank of ASEAN Bank is buying a technology.
You spoke about pricing. I mean, this 1,000 crore order pipeline is pretty impressive. But on pricing, what are you seeing? Is there any kind of pressure that you're noticing from clients?
No. In our case, there is no pressure on the pricing. We are increasing the pricing. So our license, which we used to sell in 5 crore, today we are able to sell in 10 crore.
Okay.
So that's the kind of a differentiation we create when we create a brand, and when we create a substantial analyst ranking. My price has almost doubled on license. So if you observe in the last 3 years, we used to have 1/3 license and 2/3 implementation. Now we have a license and implementation. So so pricing is not a concern for us.
Okay. Can you give us an idea of what is the contribution of the top 10 clients or the top 5 clients?
We have 245 clients totally, but top 10 clients will be less than 20%. So we have a very well diversified portfolio. I would say in the top 10 clients, if you look at it, Reserve Bank of India or JP Morgan Chase or Barclays or Lloyds or banks from Spain, I think this is a very healthy pipeline.
You know, other IT companies keep complaining that the BFSI sector is still not resurgent, is still not giving too many orders. What has been your experience since you are entirely in that space?
Our experience is that there's a behavior shift between buy versus build. So banks in 2016-17 were more in a build phase. Now we are seeing that to accelerate their digital agenda, they want to buy and co-create something with the partners. And I think we are getting a good traction in now America, Canada, and UK and Europe, where they are seeing that why shouldn't I buy the product and then customize on the top of it rather than building from the basic ground up.
All of a sudden, there's a massive surge in aluminium stocks. I don't know if this is global in nature, but just take a look at the Nifty metal chart now. At the high point of the day, maybe that carry trade has resumed globally. And if you take a look at Indian stocks, the likes of Hindalco, Nalco, intraday they have absorbed a lot of selling and have moved on. So big moves right now happening as far as the metal pack is concerned, and in particular on aluminium. So that's something to keep an eye on. But tomorrow is budget, of course. Lata has an interesting primer prepared on what to look forward in the budget document and why. Lata?
Okay, well, I'm not going to touch about LTCG and stuff like that. I'm only looking for those numbers which economists will look for to give the budget an A+. Okay, now the first number that they will look at will be the nominal GDP. Remember, we are not talking about the 7%, 6.5. Those are real GDP. Nominal GDP is in current prices. It is this real GDP plus inflation. That's usually around a 10% number. In the current year, that is the year underway, the last year's budget had said that we will expect 11.75% rise in nominal GDP to 168 lakh crore. We now know that we didn't grow so fast. The CSO has already told us that we are only growing by 9.5%. So you will get a 166 lakh crore. On this base, what is a reasonable estimate of next year's growth? If the government were to assume 11.75% growth, which will be about, a 185, 186 lakh crore nominal GDP, the economists will be happy. Don't assume a GDP growth more than that. 11.75 is fine. Now, let me just tell you where you will find this. Okay, just putting all those numbers together for you. The current year, assumed 11.75, we are only going to deliver 10. But for next year, that is the last column, FY19, that's what you have to look at. 11.5 to 11.75, good budget. That's a good assumption, credible assumption. Now, where will you get it in the budget papers? This is important. If you are really interested in going to your numbers yourself, just click in indiabudget.nic.in and then you will get this series of links on the right side and go to budget at a glance. You will get that grid. In that budget at a glance, go to the first link, which is a PDF. You can download that PDF, budget at a glance. Go right to the bottom, you will get the nominal GDP number. If that is 11.75, good. People will be happy. The next number people will look out for will be the fiscal deficit number. In that same table, before you come to the footnotes, go to entry number 22. That is the 22nd row. That will be the fiscal deficit number. And there the fiscal deficit number, last year it told us that this year's deficit will be 3.2%. In all probability that will get revised higher to between 3.4 and 3.7. Actually, don't even be worried if it is 4%, because they may include, according to Arvind Subramaniam, the recap bonds as well. But we are interested in the last column. 2019. That last column should be 3.2% or lower. 3.2% par for the course. If it is 3.1 or 3.0, that will be regarded as an excellent budget. Okay, so that will get an A++ if it is anything below 3.2%. Now, if you want it in absolute numbers, I could give it to you. That's just giving you too many numbers. This year, the fiscal deficit was 5.4 lakh crore. It will get revised higher to about 5.8 lakh crore. But more importantly, next year, this 3.2% will be, in actual numbers, 6.3 lakh crore thereabouts. If it is that number, not to worry. The economists will still continue to give it an A+. Now, what will this be premised on in terms of tax growth? What is a legitimate tax growth? Revenue assumption. Okay, I mean, you can always assume 20% revenue assumption and then you will get a 3.2%. But economists will not believe that. What will they believe? If nominal GDP grows by 11.75, then tax should grow by a similar number. Economists are ready to allow even if that is more than 11.75 because they are expecting a tax buoyancy. So, this is the number. Even if the tax revenue growth is assumed at 13 to 14%, economists will still say it is credible. Nominal GDP grows by 11.75, tax can grow a little more because, indirect taxes will be higher. This year is a disrupted year. Next year, it should be better. So even if they assume a tax revenue growth of 13 to 14%, economists will not say it is, he's assuming the moon. It will be considered a good budget. Let me just break it up into direct tax and indirect tax. Direct tax is where this is where you'll find it. You go again to that same indiabudget.nic.in page, and there in that same grid, you will find the direct tax numbers. Actually, you have to go to the 5th entry, which is the tax receipts entry. Direct tax, if the assumption this year was very strong, because, because of DMO, because of GST, more people were getting into tax assumptions. So this year 17% is good, but on a huge 17% base, next year you can't assume 17%. So according to economists, 13-14% is about the best. If they assume more than that in direct tax, that's a bad assumption. The government will get brownie points if it sticks to 13%. And finally, indirect tax. Here there's a huge confusion, so I really don't know how to help you all. Current year itself, there are some people who believe that indirect tax will fall by 1% compared to last year because of poor GST. Some people believe it can even fall by 10% compared to last year because, GST was disruptive. But because the base is low, next year people are ready to give the government benefit of doubt. If the assumption is 15 to 17% growth in indirect tax, it will still be considered good. So these are the key numbers that you will watch out for.
Okay, well, we hope our viewer is now well educated as to what to expect from the budget. Well, I didn't want to say that. You said that. But that's what you should expect from the budget, or rather, those are the numbers that you should keep on your radar. But with that, the market is absolutely flat. I think we can hear out what the market wants from the Finance Minister, Arun Jaitley. So let's listen in.
I think it's going to be a rural-focused budget, and that's no surprise to anybody. So rural infrastructure will dominate, I think, the Finance Minister's speech. So he'll be talking about, I think the big project will be last mile electricity connectivity. So they've done exceedingly well by bringing electricity to the villages, but the homes have not received it. So you got talking about last mile access. If they get 70,000-80,000 villages electrified in that fashion this year, it'll be a great achievement. That's one. Second is, I think there will be a big spend lift on rural roads. Maybe, micro irrigation. That could be a big thing in the budget. I think DBT, huge. There'll be a massive increase.
A lot of investors are clearly worried that we might be seeing more populist measures coming through to actually influence the common man as such. So we need to keep an eye on that with the way the budget is currently set up. There isn't a great deal of room to see much populist measures, but obviously there's a risk of that.
No taxes, I think, should be changed. We had a GST come through in July, and already people are coping with the changes in taxes. We have seen some businesses such as cigarettes go through a double whammy on taxes, which is entirely avoidable in the way it was executed. So I would really pitch in for stable capital gains tax, stable GST rates, and no changes. I think the budget has to become a statement of accounts and a broader statement of borrowings, which the government wants to do, rather than now tinker with tax rates.
All right, so that's the expectation. We have put all the numbers over there. We will wrap up on Bazaar, but here's a quick reminder. Tomorrow, Bazaar begins early. We'll be up, all three of us, at 7:30 a.m. and you stay tuned in. That's going to be the most important Bazaar. For the moment, thank you for watching this edition. Trading Ideas lined up on Chartbus.